This is your technical update from the LMAX Exchange Research and Analytics Desk for Monday, April 11th, 2016. Euro dollar. So the euro continues to consolidate just off recent 2016 highs from the previous week at 114.54. And at this point, it's difficult to determine the next key directional move for this market. If we see a break above 114.54, there's some stiff medium-term resistance ahead of 115. So there is every good reason to believe that the market might be well capped towards 115. But at the same time, it's going to take a break back below recent lows from the previous week at 13.27 to strengthen the possibility for a bearish resumption and accelerate declines. So right now, 114.54 and 113.27 are the key levels to watch above and below. Sterling dollar. So cable is showing a bit of a bounce in recent trade after stalling out ahead of 140. Though overall, clearly the downside pressure remains intact here, with rallies expected to be well capped ahead of the next downside extension back below 140 and towards a retest of those recent 7-year lows at 138.36 further down. At this point, only back above 145.15 would compromise the bearish outlook. Dollar yen. So dollar yen continues to trade lower following that break below that previous consolidation, that multi-week consolidation and psychological barrier at 110. At this point, there's risk for this downside move to extend towards a measured move in the 106.50 area, with any rallies now seen very well capped up towards that previous support now turn resistance at 110.67. Euro Swiss. So Euro Swiss has pulled back in recent trade towards some key range lows around the 108 area, but overall, while the market holds above 108, the recovery outlook still remains intact and the market should be supported into this dip ahead of the next upside extension beyond 110.24, a recent peak, and towards the recent multi-month high at 112 further up. Aussie dollar. So Aussie has pulled back from its recent 2016 high at 77.23, though the market would need to establish back below 74.77 to suggest a meaningful top is in place and accelerate declines. Until then, the risk does remain on the top side, and we could see a push above 77.23 towards next key medium-term resistance at 78.50 further up. Dollar CAD. So dollar CAD has been showing signs of a potential base in recent trade, though this latest round of setbacks does put the pressure back on the downside, exposing the recent 2016 base at 28.58, which guards against the key October 2015 low at 128.30 further down. At this point, it's going to need to take a break back above 132.96, that high going back to the 24th of March to take the immediate pressure off the downside. Kiwi dollar. So Kiwi has pulled back from its recent 2016 peak after stalling out shy of critical medium-term resistance at 70. At this point, rallies are continued to expected to be well capped in favor of the next downside extension, but it's going to take a break in this market back below 65.46 to really put the pressure back on the downside. SPX 500. So the S&P 500 is starting to show signs of the potential for the formation of a medium-term lower top below the record high from 2015, which should be around 2080 or ideally ahead of 2100 ahead of the next major downside extension. Look for a break below 2021, that low that we saw going back to the 24th of March, to strengthen this outlook and accelerate declines back towards the February base at 1808 further down. At this point, only a close above 2100 would really compromise this newly adopted bearish outlook for the S&P 500. Gold. So gold continues to be very well supported on dips after seeing a structural shift several weeks back on the break above some previous resistance now turned support in the 1190 area. At this point, the market is favored to continue higher towards a retest of the 2015 peak at 1307 further up. Any setbacks should continue to be very well supported into the 1190 area.